Joining us right now, Potomac Wealth Advisors founder and president Mark Avallone. Mark, good to see you this morning. Thanks very much for joining us.
Good morning.
Your thoughts as the president travels abroad today and its impact on markets?
Well, it's good for the president to take a break, a little bit of a reset after the hectic midterms, that contentious press conference. This is what a lot of presidents have done just to recalibrate for the second half of their term. I think what in his favor is that a lot of these European leaders are less popular than he is. Macron is in the 20%. Merkel's reeling from her migrant crisis. Prime Minister May is struggling with British exit from the EU. So the president, on a relative basis, is very strong going into this, and the EU economy is not nearly as strong as ours. So it's a great opportunity for him to inch forward on some of those trade skirmishes that we're having with the EU, because I think if he can tone those down, it's going to be a big plus for the U.S. market. If at the end of the day, the only party we're having a trade skirmish with is China, right, that's good for U.S. stocks.
Yeah, and then markets this morning are lower. Mike, we haven't really heard from you post the elections. Your thoughts on the election impact on markets at this point?
Yeah, a few things. One, the market likes having the uncertainty behind it. So,
right,
now we can focus, get back to the economy and earnings.
Now we know, we got the clarity of who's in charge.
We know what we have, but a lot of people, you hear this, people saying that gridlock is good for the market. I think what they mean by that is that we're not going to get anything that really surprises the market. What upsets markets is something, for instance, the Fed raising rates 50 basis points versus 25 basis points, which I believe is already baked in. So as long as we have no major surprises coming out of Washington, we focus on economy and earnings, and that's a good thing because they're very strong.
And earnings, we said yesterday, are up 29% year over year. It's been another killer quarter when you look at just profits.
Most certainly, because even companies like Disney are relying on technology to be able to make more money. If they make more money, you as a shareholder see an increased stock price. So that's really what we want. That's why I think the market's going to rally into the end of the year.
The most important market reaction, though, I think has been and will be what's going on in longer-term interest rates, with the 10-year yield yesterday closing at the highest level since May 2011.
Wow.
So the 10-year yield closed at 3.23%. I know the old saw, but it's so low compared to where it has been historically. Nevertheless, investors are going to be watching Washington, with the Democrats controlling the House, President Trump and the Republicans in the Senate. Are they going to spend even more money? Are they going to do a giant infrastructure deal that involves borrowing more money when we're already running $1 trillion annual budget deficits? I think because that market, the Treasury market, can move against you and move against you really quickly in terms of longer-term interest rates spiking. And even 4% would be very dangerous for the stock market rally.
And then you see a real disruption in equities,
right,
once you see that kind of move. Markets this morning, by the way, take a look. Futures pointing to a lower opening. Federal Reserve left interest rates unchanged yesterday. Central Bank offering a mostly upbeat assessment of the economy yesterday. They hinted at rate increases at the next December meeting. That was no surprise either. We are expecting that. Mark, weigh in there.
Well, I think what the Fed's going to, they have all the power right now. If the Fed tones it down a little bit and lets the U.S. economy run, I think the stock market continues here. Look, the Fed has no reason to be aggressive right now. You mentioned the bear market in oil earlier in the lead. The oil market is down 20% from its peak. That's telling you something about global growth overseas. We don't need the Fed to put the brakes on the recovery we're having here. It's also not going to be good for American workers that are finally participating in this economic rally. So I think if the Fed just tones it down and lets things run and doesn't become an adversary for stocks, I think stocks have some room here.
What do you think, Jason? Anything get done in these next 2 years with the new makeup of Congress?
Well, there's always talk of an infrastructure program, but that just means spending more money.
Right.
And so I've seen nothing that either side wants to actually cut in terms of spending. And when two-thirds of your budget, more than two-thirds of it, is automatic programmatic spending, and you see states expanding Medicaid, there's a lot of spending that's going to go on in Washington, D.C.
By the way, I want to bring up that Medicaid expansion. So it was 3 states voted for the Medicaid expansion, including your home state of Utah. And you know how they're paying for it? Raising the sales tax, right? So that's so they raised the sales tax, which is a regressive tax that hits the poor harder than anyone else, to pay for Medicaid for working men above 138% above the poverty line. So again, they're hitting the poor to help pay for it. That doesn't make any sense at all.
And part of the pitch was if for every dollar that the state of Utah is able to put into it, they get so many more dollars coming from the federal government. So why would you pass up that deal? I'm not saying I necessarily support it, but that was the pitch to the voters, and it did pass.
It did.
Jason, as someone who's been there, when infrastructure needs to get done, we have some bridges in this country that are literally falling down. So what do you do? Is it just simply cut a dollar here in order to spend a dollar there on infrastructure?
Well, look, when President Obama did the $787 billion stimulus program, less than 5% of that actually went to roads, bridges, and infrastructure. We did an infrastructure program under Barack Obama. He just didn't spend it on infrastructure.
Use the money elsewhere.
Yeah, he grew government. And its net increase, there were 120,000 additional federal workers. Do you think the education was better? Social Security checks went out better? Did we get? But no, we didn't. He just spent it on
not to mention the thousands of pages of new federal regulations.
Exactly.
Let's not forget that.
And the feds like to, politicians at the federal level love to complain about the lack of infrastructure spending, but gas taxes have gone up across this country, state by state by state. And I pointed this out yesterday. The voters in California voted to keep in place a higher gas tax pushed by the Democrats and Governor Jerry Brown. So they said, bring it on. If these voters state by state want to decide how they want to pay for their infrastructure, they have, and they will.
What about Disney earnings this morning? They were better than expected last night. The company reported earnings per share of $1.48, revenue $14.31 billion. CEO Bob Iger also unveiling the name of the company's much anticipated streaming service last night. It's called Disney Plus, which it hopes to compete with streaming giant Netflix, of course. Mark, will Disney be successful in competing in this streaming war? What do you think?
Well, it's great to see that Disney is putting their focus here. This is really a forward-looking, visionary strategy that Iger has in place. They're willing to take on Netflix, and they understand that's where the market's going. And look what the market valuation's done to Netflix. That is where it's going. And you also look at their legacy businesses. The studios are so strong in the pipeline for next year. It's like an all-star lineup. It's almost impossible for next year to not be big at the studio for Disney. And the theme parks were strong this year. The rate hikes held nicely and revenue was up. So they have a multi-pronged strategy that positions them incredibly well. I have high confidence in management executing it. And yes, I think they're in the right space at the right time.
So Disney with the streaming service, Mike Murphy, Apple's going to come out with a streaming service. I'm just wondering what this does to Netflix. Would you buy Netflix at these levels, given that valuation and all of this competition coming at it?
Definitely not. And I think for the millennials out there who are cutting the cord to save money, all of a sudden they're going to be paying for Netflix and for Disney and for Hulu. So let's see how much money they save. But Disney's multiple is roughly 19 times earnings. Netflix roughly 110 times earnings.
That's what I'm saying.
That's halfway there. It's a $300 stock.
Okay.
But of those three, Hulu might be the one that falls by the wayside because of the interface and because of some of the things that they do. When you start watching programming, all of a sudden they start charging you more for watching live programming. You look at your bill, you're like, huh, what happened?
Right, exactly.
I think Disney, because of their lineup with Marvel and all that content they have, it will definitely be someone to reckon with.
and Star Wars.
Star Wars. Sorry.
And AT&T has not figured out how to play this game. I tried to go on and use their streaming service. As soon as you start downloading stuff, it starts slowing down. You can't watch it.
It's a lot of competition coming on.
That DirecTV streaming service is glitchy, to say the least. It has the constant flu, if you will.
Does it really?
Yeah.
All right.
Not
Mark
good.
Avallone, thank you, sir.